So welcome all of our participants to our regular Thursday afternoon Innovative Business Advisors webinar. We have an interesting afternoon here. We have been waiting feverishly to hear something from our Congress. And Steve is going to give us an update on where we are with all of that. We do have some updates for you relative to the CARES Act. And then in addition to that, Steve is going to jump in and give us an update on some techniques and tools that we have available through IBA to optimize your business. So again, I'll remind everyone that you do have access to the Q&A button to ask questions at any time during this webinar. I will act as facilitator and I will try to gather those questions and make sure that we answer them. The last couple weeks we've been able to answer live. So hopefully we will be able to cover all your questions live through the webinar today. But know that no matter what, we will post a recording of this webinar on our YouTube channel and have available to you Google Docs of the presentation slides that Steve is using. So Steve, with that said, I'm going to turn it over to you and you can take us into the update.
Great. Thanks, Marquita. Well, welcome everybody. We are getting close to the end of the year here. Here we are, December 10th, and continuing to talk about the COVID aid program. Unbelievable. We do have an update for you today. I'm going to also provide a little bit of an update regarding some of the stuff that we've heard about from Capitol Hill, and then we've got another presentation to walk you through to make sure that for your business you're in good shape and are certainly well prepared. The other thing I wanted to mention to you is that next Thursday, we strongly encourage you to come join us. We have got a representative from the Small Business Administration, the SBA, coming to join us on our last webinar of the year. So I think it's going to be a very, very interesting discussion, and we highly encourage you to be a part of that. And if you would like, share it with your network. We'd be happy to have your friends and neighbors and folks that you think might benefit from the information joining us as well. So with that, let me just jump in real quick. Got a specific update to share regarding the COVID aid, and then a little bit of a presentation to share with you. What we call proper preparation prevents poor performance. So we're coming through this pandemic period. Now there's a vaccine ahead of us. Hopefully we'll get there. This is going to be a short little overview about our very popular CEO to CEO program, and we're going to give you a couple of tools that potentially could be very useful to you as you're managing your business during this challenging time. So let me dive in and first off remind everybody, if you were on with us last week, we talked about this. The federal judge ordered the SBA to release all names of all PPP borrowers, including the precise loan amounts. So we've actually had a couple of inquiries. We were a beneficiary of the PPP loan program, and we've had some folks that have reached out to us. I've heard from some of our clients that they have had people that have reached out to them as well. So you may be hearing from various vendors out there that are interested in helping you deal with forgiveness and other aspects of it if you benefited from any of these programs. And that information seems to be coming from this mass release that the federal judge has ordered. So just wanted you to be aware of that. It's a little bit annoying, but it is what it is. Let's talk about a very interesting development that came through yesterday. So the SBA sent out an information notice, actually dated on Tuesday. We received a copy of it through a good banker partner of ours, and provided some additional information, which is potentially a little bit of a challenge. So for many businesses that were out there with an existing SBA loan product, and that would be a micro loan, a 7A loan, a 504 loan, the SBA has come out and notified all of their lenders in their network that they are going to be issuing Form 1099 MISCs to borrowers that received the 6-month deferral of the SBA payments. So if you had an existing loan on April 1st and you were current on your existing loan with SBA, whether that was, again, either a micro loan or a 7A loan or a 504 loan, the SBA issued you an automatic 6-month, well, it really wasn't a deferral. The SBA actually made your payments for you for 6 months. And as a result of that, now they're going to send you in the mail a 1099 that provides for the value of that. So what will that include? Remember, again, it was for all the SBA products, the microloans, the 7As, and the 504s. And those payments that they made, those 6 payments, typically would have included principal, interest, and potentially any fees. So your business will receive a 1099 from them that covers that. And the payer is going to be, if your loan is from a traditional bank or other lender, and it has an SBA 7A guarantee on it, then you'll see the payer is the lender that you had. If you're using one of the micro loan agencies or through one of the small business development centers or other potential agency that had the 504 products, you'll see them as the payers that come out. But again, this is going to be a taxable event, which means that you're going to have additional income to report into your business. The other thing is that if you had particularly a 504 loan where you are using the proceeds of the loan to buy real property, then you may also receive a Form 1098, which is the mortgage interest statement income form. And these will be issued for all of those situations where the SBA made your payments for you and the interest portion of that was greater than $600. So I think that nobody really thought about this. We haven't talked about it. The accountants that we've been talking with and the bankers haven't talked about it much. It was a surprise to the banking community. This is going to be something that is going to be primarily administered by the banking community, and they're not happy about this. So they're definitely pushing back, and clearly there's additional legislation that is pending on Capitol Hill, and we can only hope that they may use this next round of legislation to address some of these things. But as of right now, the SBA has issued notice to the banking and lending community that they will be issuing these documents as of the end of this year. And that's only 3 weeks away from now. So going to be honest before we know it. So wanted everybody to be well aware of that. I also wanted just to reiterate the IRS has come out and of course, emphasize that if your expenses that you utilize for your PPP funds are going to be forgiven, then you can't use those expenses as part of your tax filings for this year or next. There's a lot of interpretation going on around this, and I strongly encourage you to talk with your tax professional. There is a silver lining here, and that is that as many people that listen to the news and follow the news are aware, there are multiple bills right now on Capitol Hill. Everybody's very hopeful that something will get done before Congress recesses. Looks like they have passed a continuing resolution, which means that they're giving themselves basically another week to get this done. So, the government runs out of money effective tomorrow and would have forced a shutdown. But they've passed this continuing resolution to give them another week to create a budget resolution, and then as part of that, there is some additional COVID relief that is potentially going to be included in the Budget Act. They're trying to get basically one big bill done. From the various portions of the legislations that we've seen so far, generally all of them are addressing the tax implications of when and how you can utilize PPP funds and expenses against your tax returns. And there is many provisions in there that are talking about potentially forgiveness may become automatic at some loan level. So we had talked before on this channel, there was legislation out there that said if you had a PPP loan of 150,000 or less, there was the potential that there would be blanket forgiveness. There is still a lot of talk about that. And the primary reason for that is that the SBA is in a position where they now have to evaluate over 5 million loans for potential forgiveness. And that is a Herculean task for both the lenders and the SBA. So a real glimmer of hope out there that some of the new legislation may address that. So keep your fingers crossed and let's say our prayers for a favorable outcome in that regard. But barring that, you're going to have to sit down and really work with your tax professional and make sure that you've got all your ducks in a row, because this year may be quite a challenging one if you've dealt with and received any of the aid programs that are available. So from that kind of ominous news, let's move on to something a little bit more positive. So we had many of our clients in our CEO to CEO program were in great shape as this came about and had at least all of their records in such a very good shape that they sailed through the whole process and were able to get funds in place quickly and use them in a very targeted way. So we're going to take a few minutes and talk to you guys today about specifically what this program is all about. So why do we call it Chief Everything Officer to Chief Executive Officer? Well, we do that for a real specific reason, and we use a quick illustration to kind of lay that out. When we think about a business owner that's really the chief everything officer of the company, typically we're talking about somebody who has got a particular skill set, who is a real expert in the particular area that they're in, and they have elected to begin to trade their time and invest that time to generate some money for themselves, and that money, of course, creates a living for them. And this is kind of the traditional checkbook way of running our households. A lot of people that are functional experts bring that into their business. And then when that living begins to generate a little bit more than they need, they go out and find somebody else that's got some time. They give them part of their living so that they're making some money off of the business as well. And then that person begins to generate a living for themselves and their family. And that's typically how small businesses grow. It seems like, a pretty intuitive model. Everybody's probably looking at this and say, yeah, I get that pretty easily. But the big issue that most sole proprietors that are beginning to grow their business and most small business owners have is there ever going to be really enough money left over to build a retirement nest egg for me and my family? So we want to contrast this particular model with those that are really focused on being chief executive officers of their business. Now, a chief executive officer is really somebody that is driving the business and really operating in a strategic role in the business. And they have a little bit of a different viewpoint about their business. Typically, these people look at their business as a collection of assets, and those assets create revenue. And out of that revenue, they very closely monitor those revenues, and they create profits, both on the gross and the net perspective. And those profits obviously generate cash flow for the business. So what does a business owner in this stance do? They take a portion of that cash flow and they reinvest it into assets in their company. And they keep this virtuous circle running so that the business continues to grow and prosper. And the business really grows beyond their particular set of skills and takes on skills that are necessary to serve the client base that they've chosen to serve. And the executive is really there just to direct the activities of the business. These folks are really focused on executing on goals. They are preparing for transition at some point down the road. They have a very high expectation of transition, but their primary focus is not worrying about whether they can save enough for their future. They're really focused on executing on goals and building the machine so that the future is assured. So big difference in that regard. So we've created this program to help Main Street and small business owners really learn what are some of the fundamentals to get to that point in time. And it really focuses on 3 key areas. First and foremost, teaching folks the language of business. The numbers are the language of business. It is the face of your business. It is what all outsiders that are serving your business really take a look at. And when you're making capital decisions and growing your business, it is the key function of your business. It's amazing how many business owners don't really know their numbers very, very well. So we take them through a process of really understanding exactly how a dollar moves through their business. And they come away having a very clear understanding of what's happening in their business day by day. And we teach them how to really determine what the capabilities are in the business so that they can then set goals for themselves and their business that are even greater than they may have thought in the past. They definitely learn how to identify profit leaks, really make sure that they're utilizing the money within their business to the best of its potential. And we teach them, most importantly, how to really set a course. And, making a plan is one thing. Sticking to the plan is important. But just like this pandemic, unforeseen things happen, and you got to be in a position where you can pivot on your way to the destination to get to where you want to go. And knowing your numbers inside and out really give you the knowledge to be able to do that. So the other thing we focus on is bankability. Any business that really wants to grow beyond its own capability has got to become bankable. And what does bankability mean? Bankability really means that you can go out and access capital when you have the opportunity to, potentially buy a competitor, or you need the money to open another location or to hire additional staff to take care of a big run in your products. So it gives you the access to capital, and then the ability to really use that capital as rocket fuel. And we teach business owners how to make sure their business is bankable, how that impacts them personally, and then how to be able to access that capital when they need it and use it very effectively so that as they grow, their access to capital grows with them. And then finally, we give them a framework by which they can really make some key decisions that help them grow the value of their overall business. There are several things that are indicative of value in a company, and we teach a methodology that gives business owners a 8-sided dimension of value, if you will, which enables them to really think through strategic decisions that they need to make when it comes to adding to their business, to make sure that they're adding value to their business as they grow. And we'll talk about each of these a little bit more. We do this in 20 sessions. And the first session starts with an income trend, and that's the foundation of our whole coaching program. And we're going to talk with you a little bit about that and give you an insight into what that means. We show business owners how to really assess their current position and keep that assessment well at hand so they always know exactly where they are. We begin the introduction to bankability and build on that month after month. We go into a very deep session on balance sheets, probably the most misunderstood financial reporting document that most business owners have in their report portfolio every month. We talk a lot about working capital, really teach them the ins and outs of working capital, and specifically how working capital functions in their particular business. We take from that and help them build what we call the owner's report card. And this is a way for the business owner to really judge their own performance. Are they making the right decisions that are necessary to help their business get where they want it to go? From there, we then begin to introduce them to how do they measure capability in their business. One of the common things we hear is that business owners commonly think about their business as being much more capable than it's currently achieving. So they know that their business has got, a lot of capability in it and a lot more greatness than it's demonstrating. They don't always know how to get there. but they just have a strong belief that it is there. And we teach them a very objective way of showing what the capability is in their business. We also teach them how to watch out for the profit thieves. Very interesting how the profit thieves get into the business and really can erode the profitability of the business in really slow and insidious ways. So we utilize a methodology that shows them how to measure that and then how to be able to stay on top of it once they understand how it applies, so that the profits don't leak out of their business. You know, the way we hear it described very often is that, yeah, my business would be very profitable, but I didn't have so many holes in my bucket. Well, we give them the plugs to those buckets so they can't keep that money in their bucket. From there, we teach them how to measure the optimal performance of their business. And again, you know, when we go back to the owner's report card, they begin in the owner's report card back in session 6, taking stock of how well they're doing. By session 9, they've got an idea of how to measure optimal, and we really show them the secrets of how to make sure that they're configuring their business to produce the optimal performance that it's capable of. Then we get into, in session 10, you don't know what you don't know. We teach them how to look around corners a little bit, how to look into the future and begin to set some parameters about how they want to see the business run. And then finally, in session 11, they've spent 10 very strong sessions learning a lot about their numbers. In session 11, we show them how to let the numbers talk to you, to what we call teaching the numbers to sing to you, so you can really let the numbers talk and show you the actions that are necessary as a business owner. And then finally, we get into what we call the upside down business model, and I'm going to come back to that in a second. And from that, we set a forecast and forward-looking program in terms of setting the course for their business, where they want to take it into the future. And then through the next 6 sessions, we work with them to stay on course and make the necessary adjustments that are absolutely necessary for their business, but correct and stay on course so that they can actually reach their destination. And generally, by the time we get through 20 sessions, the students incredibly confident of their business. They've seen profits in their business. Very normal to see profits in their business double, triple, even quadruple. And we've got one company that's generating about 5 times the profitability that they had generated before. So significantly more profits, but you know, that's really nice, and it certainly makes you sleep easier at night. But the big thing is giving the owners confidence that they are able to identify and achieve the capability and optimal performance that they know is resident in their business. And you know, when you've got that confidence, it just makes you rest a little bit easier, and makes the you know, the ups and downs that you face a little bit easier to face, because you know that at the end of the day, you're going to be able to confidently get through it. So this just lays out for you in 20 sessions how to go from soup to nuts, if you will. It is well defined, and it's not so much that you can't take it all in, but every session builds on itself. So it's really, really impactful as the business owners move forward through it. And sometimes we get the question, well, you know, can I do the short course and get this under my belt more quickly and begin to realize some of those benefits earlier? Our experience is no. There's a lot of work that takes place here, and you really got to do it sequentially and invest the time to go through it. And those that do, you know, this is one of those situations where the tortoise takes the prize, right? As you work through this information, it really does resonate and produce incredible rewards for the students. So what was that method we talked about, that whole turn upside down method? Well, if you think about the basic accounting method, the traditional way of thinking about your business is we generate some level of sales and revenues. And from that sales and revenue, we subtract all of our expenses. And then what's left over is either a profit or a loss. And interestingly enough, most of the entrepreneurs that we talk with, one of the first questions we ask them when we're assessing their business is we begin to ask them about their numbers, and it's the very rare entrepreneur that knows their numbers inside and out. And one of the questions in our deck is, what's the first number you look at when you get your financial reports at the end of the month? And the most common answer we receive is, well, I always look at the bottom line number. And, if you think about that for a minute, we always ask the follow-up question, why do you look at the bottom line number first? They say, well, we want to really know whether we made a profit or not. And, if you've worked all month long and you don't know whether you've made a profit or not, that makes for a lot of anxiety in that monthly period. So that's kind of the normal process that we see business owners relying on every day. And we teach them that there's really a better way. And the better way is a program that we call the Upside Down Method, their new model. And that's really taking sales and revenue and planning for your profits from every single sales dollar that you take in, right? Well, what's left when you do that? What's left is allowable expenses. So you have to have a way to really figure out, what are allowable expenses? How do I make sure that I have complete control over my expenses so that I can truly only allow those that are necessary in my business to occur? Well, the beauty behind that is what we call the income trend. And if you think about this for a minute, if you're a business owner and you're getting your reports from your bookkeeper or your accountant at the end of every month, you're typically getting a profit and loss statement, you're getting a balance sheet, and you may or may not be getting a cash flow statement. Those make up the traditional financial reports. We see operating statements, profit and loss statements that are on average about 3 pages long. We've seen them up to 11 pages long. Can you imagine an 11-page financial statement? That's like reading a book every month when your financial statements come out. But the interesting thing is, normally the normal format only shows the current month. Well, it's kind of nice to review what happened in the previous month, but you really can't see the trends of what's happening in the business. So what we strongly recommend is you begin to reformat your numbers and focus on a trend. Look at the months next to each other so you can actually see the trends of the business. We teach through this course to run your income trend in a rolling 12-month period. So at any particular time, you've got the past 11 months and your current month in front of you. So you really can see what's happening in your business as you watch the numbers change from month to month. Again, you're not looking at them in isolation. Now you're looking at them in relation to what has happened in the past, and you get a chance to really see how effective are you. The other big difference that we enforce is we also require our clients to add this percentage calculation next to the numbers. So you're probably looking at this and saying, "Wow, a spreadsheet that doesn't look like it's something I want to spend a lot of time paying attention to." And there's a lot of numbers on that particular spreadsheet. But really, what's interesting is if you look at this particular example, businesses' revenue and expenses change from month to month. How do you know whether that change is good or bad? Unless you begin looking at the percentages of each of those numbers in relation to the trends that are happening in the business, it's difficult to see whether those numbers are good or bad. So these percentages are called the common sense method of evaluating your financial performance. It's a really easy method to learn and an incredibly useful tool to use as you're running your business moving forward. So these are some significant changes that business owners begin from session one learning how to put into place in their business. Second thing we do is we get it all on one page. Now, for the sake of this illustration, I'm showing you the top and the bottom of the page. But it's really important to have it all on one page and have a report that's very useful in that regard. We also create what we call this true cash line. So one of the common experiences that business owners have is that they look at their bottom line profit or loss in their business and they say, gee, that's nice. We had a net operating profit in our business, but you know what? We don't have much cash in the bank. Where'd all the money go? And there are some specific reasons why that takes place. So basically what we do is we bring some additional computations into their spreadsheet so they can really see what takes away from their profit, what balance sheet adjustments such as monthly principal payments take away from the cash balances of their account. And it's really a little bit of a hybrid, but our clients really find that true cash measurement really does begin to line out with how their bank balances end up. So it becomes a much more useful report for them. The other key thing we teach them is there are really 3 different types of expenses. And this is another client's example report here. This is further into the learning. So this is beyond session 1. They learned how to classify expenses into 3 different categories: direct expenses, indirect expenses, and fixed expenses. And that's important because those expenses move in different cadences through the course of the business over time. So when you really begin to understand the nature of the expenses that your business is experiencing, then you can begin to exert a pretty high degree of control over how they move through your business. So the other thing that is a significant learning for most of our clients is we focus them on gross profits. Gross profit may be the most important line item on your P&L, because when you think about what gross profit is, and just to take a minute to define it, gross profit is your sales minus the direct cost of delivering that product. So if you're in the service business and you've got people that are delivering services, let's say you've got a commercial cleaning business, and your primary costs are the people that you dispatch out to clean the facilities, your direct payroll expense is your highest cost. You generally can't generate the revenue without the cost. And those direct expenses are those that move in direct relationship with your revenues. And frankly, the most important line for you as a business owner is gross profit, because until you're generating significant profits at the gross profit line, you can't cover all of the other indirect and fixed operating expenses of your business. So it's very common for us to see, as in the example on your screen, this, if you look at this and think about it for a minute, this company has a 20% swing in gross profit over a 4-month period of time. That's a huge swing. And when you can take out some of that variation in the business, or even potentially all of that variation in the business, all of those lost dollars begin to find their way into the net profit of the company and begin to stay in the company's bank accounts. So very, very significant lesson, and it's a key learning for most of our students early in the process. Another key thing that business owners struggle with is working capital. And one of the key things that business owners don't do is measure what is the working capital requirements of their business. And those things change over time. So that's normally where we see people get into trouble. They're used to working capital levels being at one point in their company. All of a sudden they get a big new customer, or some big changes, or potentially lose a big customer, and their working capital requirements change and dive them into a cash crunch. And that's generally what the experience of this particular business, as we're seeing it on this graph, illustrates. Their actual working capital in the business is shrunk from 145,000 down to 78,000. But at the same time, their business working capital demands were growing from 166 to 375. So this is a clear situation where they are probably experiencing pretty severe cash flow issues and trying to wonder, are they going to make payroll every Friday? So these are key things to understand it. And once business owners do understand it and put in place the very easy ways of tracking it, they can clearly see where their business is going. And again, that just gives you the confidence to be able to not only sleep well at night, but make investments to grow your business when it's necessary to do so. The business owner's report card we had touched on. We have basically 10 key ratios that we start with. We teach our students how to compute them, put them into place, and utilize ratios in order to help provide the information to the owners to run their business effectively. From the numbers, we talked about bankability. Well, bankability really begins with understanding what is your current debt situation. So we actually have clients build a debt schedule. It's amazing the freedom that people experience when they can actually see everything laid out in front of them and then how to begin to deal with it effectively. So this is really another key methodology that comes as part of the training process. The most astounding part of this is all of our clients that have gotten through this period of time and then went out to utilize lending, they've universally come back and said to us, wow, our bankers were so impressed when we showed up with this information. They told us that none of their other customers do this, and it just made getting the money we needed so much easier. It just astounded them and their bankers. So this again really gives you the confidence to be able to go get what you need, and it really impresses those who are going to be in a position of lending you the money that you desire. We also talked about optimal, and we teach people how to begin to measure optimal. And we do that utilizing the common cost method. And once they get into that methodology of being able to identify what are the optimal performances of their business, that's when they can really begin to rack up additional profits in their company. So the results of all this for our students is they really have a very strong daily summary of key activities that are happening in their business. They know exactly what's going on, and the business is reporting to them now. They don't have to go out and dig all this stuff up. We put into play the reporting methodologies that allow the business to report to them. They really learn which expenses to pay attention to. Things do move over time, and there are certain ones that have a big impact on the business, and learning the specific ones that you need to pay attention to in your business makes it much, much easier. You don't have to watch them all like a hawk, but there are certain ones that you got to pay very close attention to. You also have a very easy way of determining when is the right time to add people, to add assets such as another building, or reinvest in equipment or other resources that your business needs. Again, the numbers will speak to you and tell you when those things are really necessary, so you don't have to guess anymore. The key thing is that our students really learn to know their profitability before the accounting reports come out. They have very strong confidence and are in a position where they can predict the profitability that their monthly and quarterly reports will show them, because they have been watching it day by day and week by week. They know it ahead of time, so they're never surprised anymore by their accounting reports. And they have 90-day goals, and they set their own goals, and they have a confidence level that they can achieve it. In fact, when we encourage them to stretch and really create big, hairy, audacious goals, they're typically a little leery of doing that. But after they've achieved them, it's amazing to watch the confidence that inspires in folks and the ability for them to move forward. Bottom line is they end up with significantly more money in their bank accounts. And at the end of the day, that makes all the work worthwhile. So another key thing we talked about is strategic decisions. And we have been a value builder consultant for many, many years now. We find it to be an incredible methodology of teaching the 8 key dimensions of value that every business has within it. And the key thing about thinking about your business in these 8 different dimensions is, some of these things you may be exceptionally strong in, some of them you may be really weak in. And frankly, sometimes those weaknesses can make your business totally unsellable and completely eliminate the net worth of your company. So you want to be cognizant of all of these things. And again, when you think of these particular dimensions of value as a business owner, and you're making strategic decisions in your business moving forward, this just gives you that framework by which to make those decisions. So you can always look back and say, will this have an impact on customer satisfaction? If it's going to be positive, great, let's move for it. If it has a risk of us eroding our customer satisfaction, is it really worthwhile for us to do that, right? So let's talk just briefly about those. The cornerstone of every valuation are always the financial performances of the business. Financial is measured in two ways. Financial is measured in the profitability that the business produces, and at the balance of profitability against the working capital. So what is the capital that the business needs to actually operate? And then what's the return or profitability that capital deployment kicks off? Those always form the cornerstone of valuation. But it's these other things like customer satisfaction and growth potential, and recurring revenue, monopoly control, hub and spoke, and the Switzerland structure. All the rest of those other 6 dimensions also have a very, very significant impact. And Marquita's been a lead teacher for us in this methodology for several years now, and is just phenomenal in the work that she does in this regard. But again, once each of our students understand what makes up the measurements in each of these areas, then they can utilize that as a whole methodology to inform their thinking moving forward. So let me just reiterate. What do folks learn in this program? They learn the numbers of their business. They learn them inside and out. They learn bankability in their business and how to be able to really access capital when they need it. And then finally, they have that wonderful framework by which they can use to make key decisions in their business moving forward. So we strongly encourage our audience to think about your own particular situation in that regard. If that program would be of help to you, or if you know somebody that you think could benefit from that may be struggling with cash flow issues, or maybe struggling with various issues in their company, we would certainly love to talk with them, and would be happy to do a one-on-one consultation with them and see if this is a program that could be of help to them. So thanks for your attention today, folks. Hope this was useful, and please, if you've got any questions in that regard, I'd happy to entertain those before we call it a day. Marquita, I think I see you wanting to join us, but I'm not hearing you.
Okay, I'm going to try this. Can you hear me now?
I can hear you now.
Great. Okay, so I have my microphone headset off. Something I must have a short there. So you're going to hear everything going on around me at the But no, Steve, thanks. Great update. That was very, very good. And we did have a couple questions come in. I do want to encourage anyone who is in the audience, if you have any comments or questions, don't hesitate to type them into our Q&A portal, and we'll handle those now. But Steve, one question that we did receive, and this came in your early review of the update on the CARES Act program. And Gary asks the question, what is the threshold on loans that require SBA verification? So, and I'm assuming the way this question is worded, I'm assuming is referring to what is the threshold level at which you don't have to complete the full the more complex form for forgiveness. I think that is what he's asking.
Okay. Well, the audience may remember last week we did a little bit of an overview of each of the forgiveness applications. There's 3 of them. There's the short form, which is out there if you've got a loan of $50,000 or less, only ask you a few questions. There's no calculations involved. Very, very easy forgiveness application process. Then there is the second form, is what they call the EZ form, and it's a 2-page application form. It does require some calculations on it, and it is designed for sole proprietors, independent contractors, and those small businesses that did not change the number of employees or the rate of pay of their employees. So that's the design criteria for the easy application. It does require you to do some calculations on the form. It is relatively easy to do, but that's that second one. And then there is the large form, and the large form is 11 pages and does require that you run through the full calculations, particularly the FTE calculations and the hourly rate calculations, just to make sure that you do apply for the safe harbor provisions that are inherent in the forgiveness application. And then finally, if you received a PPP loan of $2 million or more, if you haven't already, you will be receiving from your lender what's called the qualification questionnaire. And it's a series of questions where you've got to provide some calculations to justify that your application was covered under the spirit of the CARES Act and that you actually needed the money. So there's the 3 forgiveness applications, and then there is the questionnaire for those large borrowers.
Great. Thanks, Steve, on that. And then we have one other question from Warren, who is intrigued by the CEO to CEO program and wants to know what the fee structure for the program is.
So we run the CEO to CEO program in 2 different groups. So for individual companies, we run the we do it on what we call a one-on-one basis for individual companies, and that typically will involve the chief executive of the company. Very often they may have a bookkeeper, accountant, and potentially operations manager or some other key individuals with the company. But again, typically we do that on a one-on-one basis with the organization. The fee for that is $2,500 a month. In addition to that, we run what we call small group sessions. And typically in the small group, we'll have 5 or 6 businesses in each group. And there is no competitors in there. And then the group is in a position whereby we've structured it such that they don't have to share their information. They can keep their information private. So we've slightly adjusted the way we deliver the program so they don't have to share any information about their business. And in those situations, we charge $500 per company for the small group sessions. And keep in mind that those prices are per session, and we require you to sign up for the sessions as a whole. You can prepay it in a lump sum. You can pay it on a quarterly basis, or you can pay it as you go through each of the sessions. So we're quite flexible in terms of the way we receive payment.
Great, Steve. Thanks. Well, I'm looking at our Q&A portal, and I don't see any additional questions at this point in time. I see a thank you for the answers. And with that said, I think we're going to begin the wrap-up process. It's 3:49 now, so we're going to wrap up just a little bit early. And what I'll do is offer to you, Steve, an opportunity to make any last comments, and then we'll wrap it up for today.
Well, before we get into that, Marquita, you've been teaching these CEO to CEO sessions for some time. Do you have any comments to add to the shorter overview I provided for our audience today?
Well, I'll be happy. I'll be happy to add some of my own thoughts about it. And, you know, typically what we see here, and I want to put this in the context, Steve and I both come from large publicly traded companies as our background. And much of what you see in this program amounts to information that we learned in our respective MBA programs, and then it was built upon very heavily in the industries that we grew up in as management trainees. So this is the kind of training that many of us who have a background with the large publicly traded firms will acquire over the course of our career. The interesting thing about it is for individuals who begin their career as entrepreneurs and in small businesses, these kinds of approaches to, I call it the MBA of running your business, are not made available, or we don't have the time early on to just take a year out and be a management trainee, so to speak. And what these programs allow us to do is spend time with you on the job, so to speak. We are going through and looking at things from a very I want to say both strategic and tactical basis, but heavily financial oriented, because when you get down to it, that is the core of what makes a business profitable or not profitable. And once you understand these concepts, you can be the CEO of almost any firm in almost any industry, because these are transferable, learnable and transferable tools that you can take forward. Steve, turn it back to you. Any comments you want to make?
Yeah, I would also add in, it's interesting, we've had a couple of startups that have gone through with us as well, startup companies. So, you know, is this available for basically any size company? Yes, we've done everything from startups to, I think the largest company that we had in it was somewhere around $50 million. So in terms of our client base, that's about the way we've delivered it. But yes, it is. These are tools that are well regarded in the large business community that many times small business owners, medium-sized business owners just are never made aware of. So they just don't know the tools that are available to them. So, you know, Marquita's right. We built this, Innovative Business Advisors built this program. We leaned heavily on our experience to do so, and the feedback of our clients as we built through it. And it's a lot of fun. It really is exciting to see companies transform and really begin to accelerate into their capability. It's a lot of fun to work with them in that regard.
So Warren says, sends a comment. He says, I thought it looked familiar. LOL, my Fortune 100 experience. Yeah. But most entrepreneurs don't have that, 12 to 18 months to invest, if you will, in a management training program before they're really hitting the bricks and doing at the same time as learning. So this is an awesome program for that.
Yeah, it really is. Really is. Well, listen, we're very appreciative of our audience every week. As I said, we've got a very special guest next week from the SBA coming to join us. I expect that we'll have some interesting questions. I'm doing my homework ahead of time. I'm expecting that Marquita and I will lead a very interesting discussion with this individual, and hopefully it'll bring a lot of value to our audience. So we strongly encourage you to attend, and we're very, very thankful that you do attend with us every Thursday afternoon, and we just wish you all the best.
Okay, and also remember, everyone, that you should expect within the next 24 hours, you will receive an email with a recording of this webinar, along with a link to the slides that Steve just shared with you. So expect that to come your way shortly. And again, thank you for joining.
Outstanding. Make it a great day.
Bye-bye.
Bye-bye.